Manish, should I start?
Yeah, I'm starting. Good morning, ladies and gentlemen. Welcome you all to the 1Q FY26 results conference call of Sagar Cements Limited. We have with us today Mr. Srikanth Reddy, Joint Managing Director, Mr. K. Prasad, Chief Financial Officer, Mr. Rajesh Singh, Chief Marketing Officer, and Mr. Raja Reddy, the Company Secretary. I will now like to hand over the call to Gavin Lisa for his opening comments and then over to management. Over to you, Gavin.
Thank you, Manish. Welcome everybody to this call. We will begin this call with opening remarks from the management, following which we will have an interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to that effect was stated in the Concall invite sent to you earlier. We trust you have had a chance to go through the result communications and documents. I would now like to hand over to Mr. Srikanth Reddy for his opening remarks. Over to you, Srikanth.
Thank you, Gavin. Good morning, everyone, and welcome to Sagar Cements earnings call for the quarter ended June 30th, 2025. Let me begin the discussions with a brief overview of the market in terms of the demand and pricing, post which I will move on to Sagar-specific developments. Overall, the industry witnessed healthy volume growth, supported by a pickup in infrastructure activities driven by the government spending and improving demand from the individual house builders. Additionally, the low base in the corresponding quarter last year, due to the Lok Sabha elections and some of the state elections, also contributed to year-on-year volume uptick. On the cost front, key input prices, particularly power and fuel, remained largely stable. Given the robust volume growth, the steady pricing environment, and benign input costs, the industry experienced an improvement in profitability and margins during the quarter. Let me now move on to our quarterly performance. As indicated in our previous call, Q1 registered a good volume growth of around 11% over the previous year, as demand momentum remained firm during the quarter. For FY26, we expect our overall volumes to be in the range of around 6 million tons. Moving to the headline numbers, our revenue for the quarter stood at rupees 671 crores, as against rupees 561 crores during Q1 FY25, higher by almost 20%. EBITDA for the quarter stood at rupees 121 crore, as against rupees 47 crore generated during Q1 FY25. Margins for the quarter stood at around 18%, as against 8% in the corresponding quarter last year. EBITDA per ton stood at rupees 851 during the quarter. Going forward, as the capacity utilization improves across our units, the business is expected to benefit from operating leverage. We remain optimistic that our ongoing initiatives, such as optimizing the freight through reduced lead distances, lowering the clinker factor, upgrading Andhra plant, and increasing the share of renewable energy in our power mix, will further enhance our cost efficiencies and support our overall profitability. Profit after tax for the quarter stood at rupees 7 crore. In terms of the key operational activities, modernization at Andhra Cements Dachapalli unit is progressing as per schedule. Power and fuel cost stood at rupees 1450 per ton, as against rupees 1470 per ton reported during Q1 FY25. Freight cost for the quarter stood at rupees 860 per ton, as against rupees 844 per ton during Q1 FY25. From an operational point of view, Mattampally plant operated at 54% utilization, while Gudipadu, Bayavaram, Jeerabad, Jajpur and Dachapalli plants operated at 77, 66, 94, 48 and 32% respectively during the quarter. As far as the key balance sheet items are concerned, the gross debt as on 30th June 2025 stood at rupees 1556 crores, out of which rupees 1179 crores as a long-term debt, and the remaining constitutes the working capital. The net worth of the company on a consolidated basis as on 30th June 2025 stood at rupees 1802 crores. Debt equity ratio stands at 0.65:1. Cash and bank balances were at rupees 182 crores as on 30th June 2025. The board of one of the subsidiaries, Sagar Cements M Private Limited, has given approval to take up the expansion of the cement grinding capacity from 1 million to 1.5 million, and as part of green energy initiatives to establish a 6 megawatt solar power plant involving a capex of around 140 crores. To summarize, our expanded capacities strategically position us to capitalize on the anticipated growth in infrastructure and real estate development in the years ahead. Moreover, our ongoing initiatives to broaden revenue streams and strengthen our regional presence are expected to enhance company's overall profitability. That concludes my opening remarks. We would now be glad to take any questions that you may have. Thank you.
Thank you, sir. So we will now begin the question and answer session. Anybody who has a question may indicate by raise of hands. We will take the first question from Mr. Shravan Shah. Shravan, please go ahead with the question.
Hi, sir. Can you hear me?
Yeah, good morning, Mr. Shravan. Yes, sir.
Hi, sir. First of all, congratulations on decent set of numbers supported by the pricing. So first, just on the clarifying on the volume front. So on the presentation, we are maintaining kind of a 6 million ton for this year. So does this also include? Does this also? Hello, sir.
Yeah, Mr. Shravan, go ahead, sir, please.
Yeah. So does this also include the clinker cell that we are looking at, and also trying to understand how much more clinker that we are looking at, and once this Dachepalli plant starts, how do we are we still going to keep on selling the clinker?
Yeah, Mr. Shravan, I think we do not sell clinker in any of the south units. The only location where we sell clinker is at Indore for the external. Andhra's sale of clinker is primarily to Bayavaram. It's primarily to do the stock management because Mattampally plant line 2 was under maintenance. So during this time, there was some amount of clinker flow that has happened from Andhra to Bayavaram. Now going to the Jeerabad unit's clinker sale, as you know that we are able to produce more clinker, and the peak grinding capacity we have reached. So the residual quantity of clinker is what we sell, and we believe that by end of this financial year, so end of Q1 of coming year, yeah, we should not have any clinker even at Jeerabad, because everything we will be converting into cement, Mr. Shravan. So
yeah,
outlook
yeah.
For the current year. So we are taking two views. So one, for a better price regime, we are very clear that we would want to regulate our volumes just in case if the market prices tend to be lower, then probably there could be a higher volume. But given the price position, our view is that given the demand and the new supply that is likely into the market, our volume outlook remains close to 6 crores, but 6 million. So we would like to revise it not before middle of Q3, Mr. Shravan. So till such time, we believe that 6 million is doable, and that's what we would like to stick to, Mr. Shravan.
And for FY27, is it fair once Dachepalli will be starting by this September or December? 7 million ton is fair to assume that we can do in FY27.
Yes, sir. I think for the coming year, we believe that this is only start of a good cycle. So next year we expect demand to be much better than what it has been, or what is anticipated for the current year. So given that scenario, I think 7 million is definitely a doable number for the coming year, Mr. Shravan.
Okay, and now, sir, on the pricing front, so just to if you can state-wise, if you can help us in terms of what was the price increase which has happened in Q1, and currently are the prices same or still till now have you seen maybe a 5 odd rupees further hike or a decline? And do we believe that this pricing to kind of sustain, or given the kind of a supply will be coming in the third and the fourth quarter, do we see that these prices may whatever the discipline the industry has shown, maybe some correction can happen?
Yeah, Mr. Shravan, I think as you are aware, sir, from March exit to June end, AP Telangana, we did get around 50 to 55 rupees increase per bag. Tamil Nadu is around 35 to 40. Maharashtra is around 20. Odisha, we received, though there was a slightly higher number, but from an exit perspective, we are close to around 10 to 15 rupees. Madhya Pradesh market more or less remained flat for us. Now from June exit to July, of course, we are only 20 days into the current peak season. More or less, it is flat to slightly negative bias, but that drop is expected because of the seasonal correction. Fortunately, it is not very significant, what I would like to put, Shravan. Now, the next part of your question is are these prices sustainable? Yeah, we wish they are, but our internal view is that we have taken an overall kind of a price to be flat to slightly negative by 5 rupees from its peak in June. And we wish we are wrong. But given the demand in some pockets of the markets that we service, especially in AP, and fortunately, even Telangana government have been engaging with most of the industry players. So given that scenario, we believe that we could be better off in terms of the prices, but it's too soon. I think I would like to take this call probably middle of Q3. Till such time, even with this kind of a price regime, we should not complain, because as you know, monsoon is very, very active, Mr. Shravan. But our internal penciling in is that we did take a 5 rupee drop on an overall kind of from the current scenario, just to factor in kind of market fluctuations that are likely to happen.
Got it. And lastly, sir, on the profitability. So obviously this quarter was much better. So now how are we seeing, given the, as you are saying, even if let's assume the prices remains flat where it is, how do we see in terms of profitability? Is it fair to say 350, 400 crore kind of a EBITDA for this year is possible, or maybe EBITDA per ton going forward in Q2 onwards? More than 600 rupees is possible, because
I
this
think
time
our what we have penciled in is around 600 rupees per ton as a minimum, Mr. Shravan, if the prices remain where they are. And obviously, there is some amount of operating leverage that is likely to kick in. So we believe around 600 rupees is a possibility, Mr. Shravan.
so that will be from Q2 onwards, can be maintained 600 plus.
Yes, sir,
600.
I think so. But year-end average also, we believe the minimum of 600 rupees. That includes, some amount of small dip during the Q2, and probably a catch-up will happen somewhere around middle of Q3 to a very good Q4 is what we are expecting, Mr. Shravan. This is an average price is what we are talking.
And now no more incentive till the end of this year, whatever we were
No, I think
supposed to receive.
there is an additional 12 crore that is likely to happen. That is the only pending incentive available for the current year, Mr. Shah.
So this will be in Q2 or Q3 that likely to come?
No, we wish it is as soon. It is possible any time, sir.
Okay, but going forward next year onwards, 23 odd crore, that's the number that one can look at.
Yeah, that remains. And of course, the capex that is happening, incremental capex that is happening at Jeerabad also is likely post commissioning. That thing also would be eligible for additional.
Okay. I have more questions will come in queue. Thank you.
Thank you.
Thank you. We will take the next question from Mr. Nitin S. Dharmawat. Sir, please go ahead.
Thank you for the opportunity. Am I audible?
Sir, you are audible.
Yeah.
Okay. Yeah. So my question is, last time when we had a call, we mentioned that about Vizag land deal we can expect in Q1 results. So what is the status right now?
At this point of time, the likely date which our liaison team has indicated is around October, sir. In fact, the critical process has already been kicked in. So government again is seeking some internal clarity whether it entails cabinet approval or not. So that probably is going to add up few months. So our team did indicate that by October, yeah, we should get clearance for the sale of land in Vizag.
So by end of this quarter or early next quarter?
I think somewhere around October is what they have indicated, Mr. Nitin.
Okay. My next question is about what is our focus, margin or volume for financial year 26?
Sir, I think our focus has always been margin, sir. I see our operating rates have always fluctuating to match up with the margin. We definitely don't chase the market shares. We have been very focused on the margin. And last few years when the pricing was very difficult, as you would have seen, we did not chase the volume. We tried to conserve the money by not losing out the money, because some of the places had extremely difficult pricing where we were losing money for every sale. So that remains focus for us forever. And that is the case even for this year and years to come, Mr. Nith.
Perfect. And my next question is about the capex that we are doing. So what is the incremental capex we'll have? We indicated around 120, 130 crores for clinker capacity. So is
for us, for the current year, Mr. Nitin, it is 360 crores, sir. Out of that, 260 crores is for Andhra, around 80 crores is for Jeerabad, and around 20 crores is the maintenance capex across all the other units. So that's our current year's capex. Out of this, what we have already incurred is around close to around 80 odd crores during the current quarter. The rest is spread over next 3 quarters. As you are aware, Andhra's new preheater project, most likely we should commission before Dashara. As we speak, we are running ahead of time. But for the range, we are very confident that by end of September to middle of October, we should have commissioned the new preheater. Of course, the grinding capacity at Andhra, which is again ongoing project, which is likely to take end of the current financial year to Q1 of next year. But the whole idea here is to more upgrade. So given that our priority has always been to reduce the cost, so that more or less is happening at slightly ahead of time, Mr. Nitin.
I
And
understand.
we did place order for the grinding mill. So we are just awaiting for we did get the EC clearance for the Jeerabad unit for upgrading the plant from 1 million to 1.5 million. We are expecting what we call as the CT, consent to establish. That is likely to happen in a month's time. And immediately after the monsoon, we would start the civil works and start the work on that side. So even that expansion, we should complete either end of Q4 to middle of Q1 is what is our estimation.
I got it. And will this capex be through internal accruals or will be going for additional?
It's a mix and match of internal accruals plus some equity and also the debt. As indicated earlier, sir, whatever is the principal that we have been paying out, that would be again borrowed back. But the gross debt, the net debt position may not be significantly different how it has been for last year, still.
I understand. So equity dilution will also happen. That is what you are indicating?
No, sir. It's equity because of the rights issue at Andhra Cements.
I got it. Yeah, got it. Okay. Thank you so much and wishing you best, sir.
Thank you, sir.
Thank you. We will take the next question from Mr. Vishal Dudhwala. Vishal, you can go ahead.
Okay. Good morning, sir. Am I audible to you?
Yes, sir. You are very much audible, sir.
Yeah. So I have a couple of questions. First, on a macro level. So with the rollout of new rail corridor under PM Gati Shakti and Coal India shifting dispatch mix, how are you hedging against both rising freight tariff and input supply volatility? Are you in talk for dedicated racks or surpline to lock lower logistic cost versus peers?
Yeah, Mr. Vishal, I think you should be aware that we have one of the lowest logistic cost in the sector. Secondly, we do not have any coal linkage with Coal India, sir. The only linkage that we have is with Singareni, and that definitely comes by rake even now. And we also get a lot of imported coal. It is with both by rail and as well as by road. We believe we are reasonably optimized on our inward freight logistics, Mr. Vishal. So Gati Shakti so far, from a relevance perspective to us, is very limited. So we are very much dependent on the current options that we have, Mr. Vishal.
Okay, got your point. And second one was like your gross debt rose 9% YOY and planned principal repayment of around 200 crore by Q1 FY27. So how are you gonna fund your upcoming capex and ramp up in your Sadhguru and Jajpur plans? Will it be via internal accrual or something other sources?
No, I think as I mentioned, Mr. Vishal, it is with the most of the tenures are fairly long term for the debt. So it's a mix of both debt, equity, that is because of the rights issue, as well as internal accruals, Mr. Vishal.
Okay. Any guidance for the right issue which you have spoken about?
So we do have clearance from SEBI, and the approval is all the way up to December. So the team is working towards somewhere around Dashara time for us to hit the rights this thing, but these are all subject to market conditions, Mr. Vishal.
Okay, got your point. One last question. Like your Sadhguru and Jajpur grinding units use the latest vertical roller mill technology, right? What per ton energy and maintenance saving you have actually achieved versus your legacy?
Mr. Vishal, I would encourage you to look at our integrated report. I think it's very exhaustive. So it's self-explanatory because in each unit, each product, it's product-wise very different, sir. I would definitely encourage you to look at our latest integrated report, which gives all the details, Mr. Vishal. Or you could reach out to any of our team for any specific queries you might have.
Okay, got your point. Thank you.
Thank you.
Thank you. We will take the next question from Mr. Badri Vishal Bajaj. So you can go ahead with your question.
Morning. Giving for opportunity. Sir, I have got your future projections in detail with annual report. Also, my earlier shareholders or analysts have asked, you have given in detail. My a simple question is, Q4 FY25, Q4 FY25, we made a loss of almost 73 crores. And suddenly this quarter, Q1 FY26, we made a profit of 7.5 crores. Now, the question is, your revenue generation for both the quarter, Q4 FY25 and Q1 FY26, remains almost same, marginal difference. But what made the company to give the fantastic margins? Though I see in the last year loss of 23 crores, there was about 27 crores on the power front, which was earlier to be debited. So please throw some light on this.
Vishalji, I think it's all to do with the realization, Vishalji.
Yeah.
I think it's a very straight equation that when the realization moves up, profitability moves up, sir. So it's no rocket science. From Q4 to now, for 50% of our markets, per bag price moved up by almost close to 45 to 50 rupees a bag, Vishalji.
Yeah. No. So the revenue should go up, no, sir?
Sir, volumes did not go up, sir. Volumes actually dropped by 15%, Mr. Vishalji.
Yeah. Correct. Yeah. Thank you, sir. Srikanth, sir. Good luck, sir. Thank you.
Thank you, sir.
Thank you. We will take the next question from Mr. Sanjay Nandi. Sanjay, you can unmute your line and go ahead with your question.
Yeah. Good morning, sir. Thank you for the opportunity. Hello.
Yeah, good morning, Mr. Sanjay. Yeah, please.
Yeah. Sir, we have seen that certain spike has happened in the power and fuel cost in the current quarter compared to the exit of last quarter, like March 24. So what has been the reason for that, sir?
Sir, I think it is more to do with the production itself, sir. I think there is a lot more clinker that was produced during the current quarter compared to the previous one. Because we are stocking up for a potential shutdown of Andhra, which we are in shutdown. So we produce more clinker, so obviously it gets factored in that particular thing. Or else the movement in terms of the specific cost has not been significant, I would put it, Mr. Sanjay. It's more to do with the inventory management. So we ended up producing more clinker. because usually for the monsoon time, we do the maintenance. During that time, the clinker gets shed. So for that, there is a huge kind of clinker built up that has happened. If you look at the slide, what we have presented on 8 of our investor presentation, sir, more or less it remains very flat.
Got it. And sir, what has been our procurement price of petcoke like in this quarter?
Yeah, we are almost close to 110. Excuse me, sir. Around $110 is an average procurement cost of us. But this includes the blended, sir. One is the imported as well as the local petcoke procurement.
Domestic.
Yes, sir.
Got it. Got it. Got it. So that's from my side, sir. Thank you so much. Wish you all the very best.
Thank you, sir.
Yeah.
Thank you. We will take the next question from Mr. Rajesh Ravi. Rajesh, you can go ahead with your question.
Hi, sir. Good afternoon. Good morning. Am I audible?
Yeah. Good morning, Mr. Rajesh. Yes, sir. Definitely you are audible.
Yeah. Sir, I have a few questions. First, on the minority interest for this quarter, there is a significant rise around 6.3 crore, out of 7.6 crore. What explains this large minority interest?
Yeah, I think it is more. Yeah, it's Sagar Cements, the Jeerabad plant operations, Mr. Rajesh. So, as you are aware, Sagar only owns 65% of that company. So, 35% is held
Right.
by the local partners. So that's the entry.
No, why I'm saying, because if I look at this Jeerabad profit, which is reported, is 26 crores, okay, which is a profit of 26 crores. So even if I take 35% out of that, it should be much lower. And Andhra Cements is obviously 95% owned, and there also
90%.
it was a loss.
No, Mr. Rajesh, it's
90%.
90%.
Yeah, yeah. No, but that's a loss only. So, the minority should be rather be lower over there. So out of this 26 crore, how come,
No, I think specific calculation should be shared, Mr. Rajesh. It is.
okay.
Yeah.
Okay. This is one. And second is about this lead distance, this freight cost sequentially going up. What is the view?
Sir, it's all to do with the volume movement. From Andhra, there has been a slightly higher volume movement. So that did contribute to a certain extent higher freight on a relative scale, sir.
So, what should be the normalized freight cost one should factor
I
in?
think we are there, sir. I think the current quarter numbers should be there. The only thing that we have to be mindful is the fuel cost that is likely either up or down should get adjusted automatically, or else we are there at the optimal kind of a freight
Okay,
cost
so this,
position and such.
because whole of last year you were incurring close to 800 rupees. Now this is close to 870
At that
rupees,
time, our
and you're saying
volumes
that
from
this
Andhra
should.
were limited, sir. We are talking of an increased volume, so that
Okay.
also, yeah.
Understood. And capex for this year you mentioned is around 360 crore total,
Yes,
right?
sir. Yes, sir.
And for next year, what is the number one should work with on a
I
total
think
console basis?
the overall number for the next year is close to around 150 crores, Mr. Rajesh. So the residual
Okay.
portion of Andhra, again the residual portion of Jeerabad, then the maintenance capex that kicks in. So our indication is around 60 to 65 crores would be left for the coming year for Andhra. Around another 65 crores would be left at Jeerabad. And the rest is the maintenance capex of around 20 to 30 crores across all the other units, Mr.
Okay. Okay. And in terms of the land monetization, what should one factor in terms of, what are the potential monetization which can happen this
No,
year and next
we
year?
did. Yeah, we did indicate around 350 crores as the net receipts,
Right, that's the
around that
total.
number. Yeah, we expect around 100 to 150 crores for the current financial year. That is subject to we getting the approval by October, and the rest to happen over significant portion in the next year, and a small portion probably should overlap into a year later. Mr. Nath. We are only trying to be
Okay,
cautious on
so
that count because
so
yeah, we are yet to engage with the
correct.
buyers. And at the same time, we believe that's a large land parcel for a place like Vizag. So we are not expecting a wholesale kind of a sale to happen on the land. So which probably needs to be made into a small fractions, not like a development fraction, but something which is handleable. So given that scenario, we did spread out the sale plan into close to 2.5 years, Mr.
Understood. And most of the critical approval which you are awaiting, when do
We
you
did get,
expect
sir. So
practically that should come through?
yes, sir. We did cross major kind of approvals. Since there are some regulatory changes that have happened since the land has been given, which is close to 50 years now. So given that scenario, even government is contemplating on what are all the applicable kind of things we need to take into consideration. So the general debate is, do we need the cabinet approval or not, is what primarily they are trying to debate, and basis that we expect the approval process to come on. But critical aspects are all covered.
Understood. That's all from my end, sir. I'll come back in queue. Thank you.
Thank you. Thank you.
Thank you. We will take the follow-up question from Mr. Shravan Shah. Shravan, you can go ahead with the question.
Hi, sir. Just to, sir, get a clarity, you said that Jeerabad will start in the 4Q FY26 to a mid of 1Q FY27.
Yes, sir. You are right.
And Gudipadu 0.25 million ton will start by?
No, we are yet to take a call on that, sir. At this point of time, given the cash flow issues, that's one area which we are yet to take a call, and we would be happy to come back to you as and when the decision is made, Mr. Shah.
Okay, but this Dachapalli will be starting by this September.
Similarly, Q4 we should complete the end of Q4 to middle of Q1. We should have completed the grinding plant even at Andhra station.
Okay. It will be in the Q4 or 1Q. It will start the grinding. So, but the clinker will start by September, October.
Yes, sir. Yes, sir.
Okay, so then we can see a clinker cell there also for maybe
Sir,
1 or 2 quarters.
We don't sell clinker in South region at all, sir. I don't think there is a big market. I just want to clarify. I don't think we would be selling anything outside the group requirement. We don't see a big opportunity even in that space in this region, Mr. Shah. It should be very opportunistic.
Okay. No,
yeah, but we have not penciled any clinker sale at Andhra. The primary reason is mostly to do with the cost management, Mr. Shah.
Okay. So even if the clinker expansion will be there, maybe we will be
at close to 25 to 30% at clinker level even now, Mr. Shevan. So we can produce more clinker at Andhra, but the market doesn't give you that opportunity at this point of time, and we don't pursue selling clinker in this region unless it is really opportunistic and really a good price is offered. Unless good price is offered, I don't think we are pursuing that option.
Okay. And regarding,
sorry to interrupt you, sir.
Okay.
Sir, can you please rejoin the queue so that we can have questions from all the participants? Thank you. So we have next question from Mr. Hiten Boricha. Hiten, please can you unmute your line and go ahead with the question?
Hello, am I audible?
Yes, sir. Good morning, Mr. Hiten.
Yeah. Good morning, sir. So my question is on the EBITDA per ton. I think you gave a conservative guidance of 600 rupees per ton, right?
For the full year, yes, sir.
Yeah. So my question is on that. We did around 850 rupees per ton in Q1, which is like one of the weakest quarter in the cement industry. And considering the prices are also going to sustain in the second half, so why
Mr.
so
Hiten,
conservative guidance?
Yeah, Q1 is one of the good quarters, sir. Q1 and Q4 typically contribute 60% of the margins and the top line, bottom line. Q1 obviously also was like, the best of the pricing only started midway through April.
Okay.
And secondly, there is an incentive receipt of almost close to 34 crores that we have received during Q1.
Okay.
But what we wish that the price remains the way it is and the demand also goes much higher. We have penciled in what we believe is likely to happen. We wish it is much more. Yeah, some people may call it very conservative. yeah, we are trying to be far more realistic in our estimation numbers, Mr. Ethan. I would like to leave that thought with you. Beyond that, I cannot comment much on whether that number is optimistic or pessimistic, Mr. Ethan.
Understood, sir. So my question is on the incentives. You mentioned 34 crore in Q1. So what is the total incentives we are expecting this year?
I think 46 crores out of 46 crores, we did receive 34, sir. Another 12 crores is due, which we are expecting in current or maybe by middle of next quarter.
So more 12 crores in remaining 3 quarters, right?
12 crores, sir. Another 12 crores is likely to hit in the other 3 quarters.
Understood. Yeah, that's all. Thank you.
Thank you.
Thank you. We will take the next question from Mr. Bhavin Chera. Bhavin, can you please unmute your line and go ahead with your question?
Yeah, hi Shrikant. Congrats on overall good set of numbers. A couple of questions. One is, what was your state-wise mix of the volumes during the quarter? You used to give that early. I think I don't see this in the press release.
Usually we disclose it at an annual basis, Mr. Bhavin, but the mix has not been significantly different from what you would see in our integrated report. Yeah, we do disclose state-wise numbers on an annualized basis because from a quarter-to-quarter perspective, yeah, it varies purely because the seasonalities are not same. If you look at Tamil Nadu, monsoon is slightly different from some of the southern states. And Madhya Pradesh and Orissa also some amount of shift. But from a percentage perspective for the current quarter, sir, it's not very it's not very different. It's very similar, sir. Around 50 odd percentage for AP Telangana. Karnataka is close to around 7. Tamil Nadu is also close to 7%. Madhya Pradesh is Maharashtra is close to 7%. Orissa is close to 15%. Madhya Pradesh is close to 10. Gujarat is close to around 3.5%. And the others is around 2.5%, Mr. Bhavin.
Sure.
Which is very similar to how we would have done it on an annualized kind of a thing, which we did like how we did last year, Mr. Bhavin.
Second question, Shrikant, more on the industry perspective and basically the wave of consolidation which we have seen and more towards South India, what has happened, the Birlas acquiring India Cement and Kesharam and Ambuja acquiring Penna and Orient. So what according to you or in last 3 to 6 months, what marketing strategy have you seen a change in terms of state-wise volumes getting impacted from this new acquisition targets because they have been ramped up? And how do you see it forward? Because clearly it looks like pricing has become, it looked from this quarter result that there has been a good pricing. So I think the competitive intensity has gone down, it looks like. So what are your views on that? Yeah?
No, Mr. Bhavin, I think from a consolidation side, sir, I think for South, it's still more an acquisition story rather than a consolidation story so far. The market share shift is not as significant as most of the people believe or think because South is still very fragmented. So most of the acquisitions that happen, if you have to look notably between Adani's and Ultratech's, some of the states that get influenced are limited to an extent that it is to Karnataka, Maharashtra, and Telangana. The bulk of the Andhra market, there has not been any shift, sir, because Orient is primarily a very large player in Telangana and more so in Hyderabad and some northern parts of Telangana. Same is the case with Kesoram, sir. India Cements obviously has a lot of assets in AP and Telangana, but primarily they are a big player in Tamil Nadu. So given that scenario, the overall market shift in terms of shares and all, what is to be expected out of so far the acquisitions that have happened is not very influential or significant. Their ramp up obviously is primarily on account of some of the assets that these people have acquired were underused. So they got to what we believe a normalized kind of a scenario. That obviously would not put too much of volume pressure onto the significant portion of the markets that we service, Mr. Bhavin, and primarily into South also. So the general tendency is that once the ramp up has to happen, price should suffer, but that's not the case in this part of the world. I think most part of last 18 months to 2 years, somehow the existing players to the new players panicked at the market and tried to focus mostly on the market share. Historically, market shares never helped any of the people, leave alone the margins. I think even the current perceived good pricing, this is relative term because our operating margins are still in the range of around 15 to 20%. I think these are the normal EBITDA margins. But with acquisitions happening at a price, again, it's a relative term whether it happened at a good price or a bad price, but these prices don't justify even the current prices, sir. So given that scenario, it's our belief is that people would not be in a hurry to ramp up. People would be a lot more cautious to put whatever is the volume that is coming up. And it's also true that some of the players are new, especially on the brand side. So it makes sense for them not to be in a hurry to take at a lower price, because if you position your product at a lower price, it would take a lot of effort and energies to take it to a level which is viable margins. So all these things have happened over last 3 months. Going forward, we believe for most of the time, I think similar situation should prevail is what we think, Mr. Bhavin.
Sure. Shrikant, and the last question, what is your South demand outlook for remaining 9 months of this fiscal? Will it grow between 9 to 11%? The way the infra capex?
You will be very surprised, Mr. Bhavin, in spite of early monsoon, the entire South grew close to around 8 to 9% in the Q1. Obviously, this growth is purely because last year was very, very bad. Because last year, the market more or less was flat across South. But if you see the net gain, we are actually close to 5% above 24 numbers, sir. So we believe that this year we would definitely cross FY24 number. And we would, in terms of percentage, and in FY23, the overall South market grew healthily at 20%. So we expect next year to be even more healthier than the current year, Mr. Bhavin. So the average outlook for the current year demand is to grow close to around 9% to 8 to 9%, Mr. Bhavin.
Thank you, Shrikant. Thank you.
Thank you. We will request all participants to limit the questions to 2 per person so that management can address the question from all participants. We have next question from Mr. Pushkar Jain. Pushkar, you can unmute your line and go ahead with your question.
My question is already answered. Thanks.
Okay, thank you. So we have next question from Mr. Girija Ray. Girija, you can unmute your line and go ahead.
Hi, thanks for taking my question. So just wanted to check previous participant what the question he was asking. Sir, do you see any kind of price discipline after these larger players are coming into the southern regions? And second question that you have mentioned, we are not chasing to the volume. So I'm having bit concern. So the moment all the larger players comes into ramping up their capacity, so this is again going to disturb somehow the southern market, and we are expecting 8 to 9% of growth in southern market. So just to help me out understanding about the price discipline and the larger players, how they are going to act for next 1 year.
Yeah, Mr. Girija Ray, I think you will appreciate from last year 5.4 odd million, we are talking of ramping up to 6 million. So whatever is the market growth, we have penciled exactly the same number for our own growth. From a pricing discipline perspective, I cannot comment for the entire industry nor for other players. Internally, we always believe that there is no point in chasing volumes where there are no margins, because most part of last 2 years, I would put it, the price is terrible. It was not contributing. So obviously, there is no point in going and chasing something which is not going to remain permanently with you and losing whatever little money that we were making was not a wise thing. So that's what we have done. We've always been very similar, Mr. Giriraj. For our last 1.5 to 2 decades that if you follow us, I think similar is the trend. Yeah, our operating rates are in proportion to the market. The South, as you know, the supply is almost 2x of demand. So given that scenario, you cannot expect any higher demand. Yeah, there are some times when there are players who are new to the market. There are some players who, for some strange reason, all of a sudden would want higher volumes to put in the market for reasons best known to them. They keep trying to test the market. Yeah, that's when we believe the prices did suffer. Will they behave same? Will they not? I cannot comment much on that, sir. But I think given some of the acquisitions that have happened in the market, the recent ones, they happened at a price which we believe cannot be justified unless pricing is healthy. So the current price regime that you are seeing is only contributing to an extent of 15 to 18% EBITDA margin, sir. That still would not help some of the players to justify. And these people are large players and, some of the brand movers. And even the existing players, whether they have expanded, not expanded, and most of us did expand, sir, either organically or inorganically. So everybody has certain kind of EBITDA margin requirement to ensure that balance sheet remains healthy. If you have to look at overall kind of a consideration, I think pricing discipline is the way forward. Yeah, having said that, there are always few quarters or few months where somebody new to the market wants to establish himself, and sometimes your seasons and sometimes some events would put demand under stress. So with all these things in, the major loser would be the price. Of course, it would be us, but the first things that would follow is the price would collapse. That's exactly what has happened for last 18 months. And that is not new, sir. It fortunately or unfortunately has been very, very cyclical. So if you trace back every 5 years or 10 years, you reach to the same point in our industry, especially in South. So we believe that's what has happened. If we have to follow the past trend lines, we believe that the cycle has turned and we are up for a good couple more years from here on.
Okay. Okay. Thank you very much, sir. Thank you very much.
Thank you.
Thank you. We will take the next question from Mr. Tom A. Kadaval. Tom, you can go ahead with the question.
Yeah. Am I audible?
Yeah. Good morning, Mr. Tom. Yes, sir. You are
Good morning.
very much
Good morning. See, I have one question. I would like to know the power cost per unit with the bifurcation like thermal, grid, solar, WHRS.
Yeah, Mr. Tom, what I would appreciate is if you could reach out to any of our team, we would be more than happy to give out because there are 6 units spread over 3 states or 4 states, I would put it.
Okay.
So at each unit, it's very, very different, but we would be more than happy to share those numbers, Mr. Tom.
Okay. That's all. Thank you.
Thank you.
Thank you. We will take the next question from Guru Darshan. Guru, please go ahead.
Am I audible?
Yeah. Good morning, Mr. Guru. Yes, sir. You are very much on.
Thank you, sir. Congratulations on good set of numbers. Regarding incentive, we have received around 34 crores. Is this number included in the EBITDA figure reported?
Sir, I think this definitely includes, sir, because this is part of the income. So out of 121, 34 crores has come in form of incentive.
Oh, got it. So in terms of pricing, we have taken around 5 to 10 rupees of price cut this quarter, right? Q2 or exit of June.
Sir, I think the price across various markets is very, very different. It's not that we have taken a price cut, sir. The price dilution has been in the range of around 5 rupees is what we have indicated. It's an average number, sir.
Okay. And the capex we are doing for Andhra Cements around 260 to 50 crores. It's mainly related to.
Year, that is for the current year. The overall capex for Andhra, just for the benefit of most of our friends who have participated here, it's a 470 crore capex spread over 3 years' time. Out of 470 crores, last year we did spend 85. For the current year, we would be spending around 260 odd crores. So the balance amount would be spent a year later. So this is primarily for upgrading the preheater because the preheater there is more than 1.5 decade old. So we are upgrading this with the primary intent to reduce the cost structure there. But incidentally, we are also getting an incremental kind of a volume. Again, we are also optimizing the cement mill, sir, wherein from a current 2.25 million grinding capacity, we would be reaching to 3 million ton. And Andhra from 1.85 million clinker, we would be reaching to around 2.3 million ton clinker capacity.
Okay, sir. Got it. One last question. With respect to rights issue, you're looking to raise around 130, 140 crores of, right? Is
So
my
we
understanding.
need to, because of the minimum shareholding compliance, yeah, we need to reduce from current 90% of Sagar Cements holding to 75, sir. So I think the price of the market will decide how much we will raise, but our idea is to reduce from 90 to 75% holding, Mr. Guru, sir.
All right. Thank you so much, sir, and
Thank
congratulations.
you, sir. Thank you.
Thank you. We will take the next question from Vidisha. Vidi, you can unmute your line and go ahead with your question.
Yeah, hi. This is Sudeep, and many congratulations, sir, for a very good set of numbers. Just one on royalty side, as Tamil Nadu had imposed a royalty on mining. Are we hearing similar kind of thing or any chat from other other south states? Anything on that, sir?
So far, so good for us, sir. So far, so good.
Right.
In the states that we operate, nothing has been indicated so far, and we wish it remains same. So that's the comment I can make. But I think some of the states which did industries, of course, are representing. From that perspective, we have not heard anything so far. Even consultations have not started in any of the states that we operate, Mr. Vidya.
That's good, sir. That's good. Thank you so much, sir, and all the best.
Thank you.
Thank you. We will take the next question from Lakshmi Narayan GK. Lakshmi, you can go ahead with the question.
Hi, sir. Congratulations. Good set of numbers, sir. You previously said that government was engaging with various cement players in Andhra. Could you just throw me some light on the infrastructure projects which are going to come, which is going to push demand, sir?
See, I mentioned it's in Telangana, Mr. Lakshmi Narayan. Government did indicate that one of the 5 guarantees that Congress government, when they were elected here, is a low-cost housing, sir. So, and Panchayat Raj, some of the projects and irrigation. These are the 3 departments together invited the industry and they wanted to supply cement. So they were negotiating for the price. And at the same time, industry again was obviously negotiating for price and the payment terms. So we hope to hear from the government soon. There were quite a few meetings that are happening and that have happened. Probably because government usually uses this time, because this time government cannot do much work because of the season. So before the end of the season, they would want to negotiate and commit. But I think we will be in a much better situation to know the quantum. Though government typically, when they are trying to negotiate, sir, they indicate a huge number. In reality, it's more a part of a negotiation. But for us to arrive at what is likely to happen in terms of the demand, probably it would take some more time. When the final negotiations would have arrived, we would be in a much better situation to indicate the numbers, sir.
Understood, sir.
Good news
Thanks.
is that they are discussing, sir. Good news is they are discussing, and this is happening after quite some time. So that's the good news.
Okay, sir. So one more question. Could you just throw a light on the limestone availability and the demand for your products also, sir? The raw material availability. Raw material availability, sir. Limestone availability and...
Yeah, Mr. Lakshmi Narayan, I would encourage you to look at our integrated report. Unit-wise, we did disclose the availability of resources. That includes the validity of the limestone mine. If you are looking at the limestone, because that's the significant portion, obviously we do source fly ash, we do source some amount of other additives, but we do have we do have those resources in the neighborhood, so we don't see any problem. But I would also encourage you to look at slide 29 of our investor presentation. So where we did indicate unit wise the the total reserves that are available at each of the unit-wise selection.
Thank you so much, sir. Thank you so
Thank
much.
you.
That's
We
it from.
will, yeah, thank you. We will take the follow-up question from Mr. Rajesh Ravi. Rajesh, you can unmute your line. Go ahead, please.
Yeah, it's a two question. Just one on depreciation. I see across two of your units in Andhra, there is a Q1Q fall in depreciation.
Yeah,
Could
Mr.
you,
Rajesh, I think those specific data we would be more than happy to share because those are numbers which are driven more from a regulatory perspective. So I would be more than happy to share any of those details unit-wise. I think that if that helps, we would be more than happy to share
Sure,
the
sure.
depreciation numbers unit-wise, Mr. Rajesh.
So this would be the more recurring numbers which one should look at, Q1 numbers
I think we are very
on the
close to that,
existing capacities.
but you should be mindful that we are going for an expansion.
Yeah,
For
obviously.
post-implementation, those are, but for that, I think the numbers more or less are aligned. So we
Okay.
have not
And on the
adopted any
KCAL
new policy. We have not adopted any new policy. It's more or less very, very similar. So though auditor has changed because from Deloitte, we have moved to BSR, which is KPMG, because of the 10 years completion. But depreciation method and everything more or less remains same. There is no change in our depreciation method, sir. But our team would be more than happy to furnish unit-wise depreciation numbers and relevant calculations for.
Sure. And one last question on the, slide 11, where you share the fuel cost trend. There you have shown that the current imported coal and domestic coal prices are almost higher by 30 paisa per kcal versus Q1 consumption trend. Are there both imported and domestic coal?
Sir, most of the transactions that have happened are on a similar trend, sir, because in between, because of the geopolitical issues, there was a surge. But likely that everything is at least slowly coming back to normalcy is at least is the indication. But if you have to look at it, we are talking of a quarter when there was a huge fight that was happening in the Middle East, sir. So during that time, some of the traders definitely would have put some pressure on the selling prices of the product. So we did indicate those mostly on the offers that we have received, sir. It's not at what price we bought, Mr. Rajesh.
Understood, sir. Great. That's all from my end. Thank you.
Thank you,
Thank
Mr.
you. We will take the last question from Mr. Shravan Shah. Shravan, you can unmute your line and go ahead with.
Hi, sir. Sir, just to clarify, you said that the 5 rupees prices have corrected from June exit to till now. That's the what you wanted to say.
Yes, Shravan, you heard it correct. In our case, it's not even close to 5, sir. That has been the generally industry news. So far, in our case, the dilution is less than 3 rupees. But the overall industry from whatever market sources, it is very market specific also, Mr. Shravan.
Got it. Second, sir, in terms of the green share, so which is at 15.45% for 1Q. So by end of this FY26 or for average, how one can look at, and for FY27, where one can look at this share to going up?
Sir, I think for the current year, we should be very similar, sir. By Q1, we should have implemented a waste heat recovery at Gudipadu because that's an ongoing project that is happening there. So with that, the green share is likely to move quite significantly only during the post this year, sir. It will be for the next year. We expect that to move close to around 22-23%.
Okay, got it. And sir, in terms of the debt level, whatever we have mentioned that we are looking at the net debt of close to 450-460 odd crore. 1460 odd crore for FY26-27.
I think the realistic number is close to around 1350, Mr. Shravan. I think that number we should maintain, Mr. Shravan.
Okay. And then in terms of, just to clarify, for FY27, you said that 23 crore incentive and plus some for Jeerabad once it will start. So what would be the number? Will it be a 10?
I would assume it is 23 for FY27, sir. The other probably should have some time lag, but for sure this 23 crores is to be expected for FY27.
Okay, great, sir. Thank you and all the best, sir.
Thank you, Mr. Shah.
Thank you. As there are no further questions, we will request management to give the closing commentary.
Yeah, we would like to once again thank all of you for joining us on the call. I hope you have got all the answers you were looking for. please feel free to connect with our team, both at Sagar or CDR, should you need any further information or queries that you have. We will be more than happy to discuss them with you. Thank you. Have a good day, sir. Thank you.
Thank you. And yes, sir. Thank you. And we will now conclude the call. Thank you, everyone. Have a good day.